this week's edition of the Bourse Report. I'm Carissa Gubin, an investment analyst at Bourse, and today we will be reviewing the financial performance of two companies in the manufacturing sector, the West Indian Tobacco Company Limited or Witco and Angostura Holdings Limited or AHL for their respective 6 months period ended June 30th, 2026. Witco reported improved earnings supported by higher revenues, while Angostura faced lower revenues and margins that resulted in weaker financial performance. So firstly, let's take a look at Witco's half year's performance. Witco reported the earnings per share of 15 cents in the current period versus 14 cents in the prior comparable period, up 7.1% year-on-year. Revenue advanced 5% to 200.3 million. Its profit before taxation amounted to 49 million, up 6.9% year-on-year. Overall profit for the period advanced 6.8% from 34.4 million to 36.7 million in the current period. Taking a closer look at revenue trends, after several consecutive periods of decline, Witco's revenue rebounded in the current half-year period from 191 million in half-year 2025 to 200 million in half-year 2026. This was driven by stronger volumes across both domestic and export markets, despite the impact of higher local excise duties. Looking at Witco's profitability margins, its gross profit margins declined from 51.5% in half-year 2025 to 48.3% in half-year 2026, reflected increased cost pressures. Its operating profit margins improved from 23.6% in half-year 2025 to 24.1%. And its profit after tax margin increased from 18% to 18.3%. On a trailing 12 months basis, its earnings have fallen from $1.36 to 44 cents in the current period on a trailing basis. Dividends have also come down, reflecting reduced profitability over the years, with its trailing dividends per share moving from $1.42 to a current 41 cents on a trailing basis. Its trailing dividend payout ratio has remained elevated over the years, currently at 93.2%, as the companies continue to pay out the majority of its earnings in the form of dividends. Going forward, dividends are likely to remain subdued unless there is a sustained recovery in earnings. At a price of $4.20, Witco's share price is currently up roughly 61% year to date, reflecting improved investor sentiment. Witco trades at a trailing PE ratio at 9.6 times versus the combined manufacturing sector average of 6.7 times, and offers investors a trailing dividend yield of 9.8% versus the sector average of 9.4%. So on the basis of improved revenues, mixed margin performance, and continued market and industry challenges associated with higher local excise duties and increased competition, as well as above average valuations, Bourse maintains a market weight rating on Witco with a watch outlook for the time being. Moving on quickly to Angostura. So Angostura reported the earnings per share of 30 cents in the current period versus 33 cents in the prior comparable period, down 9.1% year-on-year. Revenue declined 4% to 468 million. Its profit before tax declined 12.5% despite reporting lower selling and marketing costs, and this moved from 96.7 million to 84.6 million in the current period. Overall profit for the period amounted to 62 million, down 8.1% year-on-year. Looking at Angostura's revenue trends, there has been some fluctuation in its revenue over the years, with the revenue declining 4% in its latest period from 488 million to 468 million in the current period. Despite higher local excise duties, revenue from both domestic and international markets increased according to the group. Moving on to profitability margins. So its margins are currently at its lowest level across the last 4 comparable periods. Its gross profit margins fell from 49.9% to 41.2% in the current period, reflecting increased input costs, and operating profit margin moved from 17% to 15.5%, and profit after tax margin moved from 13.8% to 13.3%. From a valuation standpoint, its PE ratio, its trailing 12 months PE ratio, now trades at a more attractive level compared to its historical valuation. And this came alongside the decline in its share price over the years. So we see that its trailing PE ratio moved from a peak of 30.3 times in half year 2023 to a current 14.1 times. Its trailing earnings per share remained relatively stable year on year at 71 cents in half year 2026. So at a price of $10.01, Angostura trades at a relatively elevated trailing PE ratio of 14.1 times versus the manufacturing sector average of 6.7 times, and offers investors a trailing dividend yield of 3.7% below the sector average of 9.4%. So on the basis of lower revenues and reduced margins and continued cost management initiatives taken by the group, as well as elevated valuations, Bourse maintains a market weight rating on Angostura for the time being with a watch outlook. And that brings us to the end of this week's edition of the Bourse Report. For more information, please feel free to give us a call at 226-8773 or email us at info@boursefinancial.com. Thank you for joining us, and we'll see you next time on the Bourse Report.